we do expect, global markets eventually to continue to recover, but we would be really surprised if this market just continues on this recovery trend from here. The economic damage that was caused is not yet really priced into the market. We expect kind of a second leg down in this market, but most likely this is not going to be anything like we've seen in the first move in March. But then going into the second bottom, I think we would expect a longer term recovery. And I think that would be a bottom that would be really worth buying into again. So for now, we continue to hedge our bets. We seem to be beyond the worst in terms of the COVID crisis, but then I think the market still has some concerns with regards to, is there maybe a chance for a second wave or not? The international environment is actually quite rapidly deteriorating. I think the relationships between the US and China, where we're seeing a lot of tensions at the moment, we're seeing quite rapidly increasing tensions in the US. We have the presidential election coming up in the US. So there are a lot of things here, potential catalysts that I think we're seeing in the next few months. With these enormous amounts of debt and stimulus that is being applied now, chances are that the US dollar over the next 10 years is going to lose in value. Same thing with market valuations. We have a situation where the US stock market compared with global stock markets has a significant premium valuation that, in our view, based on fundamentals, is really not justified. A lot of US corporations very clearly have been seeing a relatively sharp decline in the quality of their balance sheet, and certainly a significant increase of debt. So very clearly the timing to start building up an international portfolio has probably, from a timing perspective, has probably never been that good in at least 2 decades. So I think that's a really good timing. It's a real opportunity, I think, for an American investor.